Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, May the 10th, the year 2018. Let's talk trading. Small. Last week, I did what? Big part one, part two. I can't remember if I did a part three or not. But let's talk about small. Many of the problems that traders face can be traced to their failure to execute something small, like applying a stop loss, going through a checklist, small steps. Before seasoned veteran airplane pilots take off, they have a pre-flight checklist. And a lot of these things are small things, but a lot of small things add up and you make big things. I've talked about exercise. Maybe you can barely do one push-up and you do that, and then maybe in a few days you can do 2 push-ups, and then by the end of the year you might be doing 50 push-ups or more. But you started small. You just did that small task, and it's repetitive. And for some people it's boring, it's mind-numbing. But the thing is, that doesn't diminish its importance. Just because something is small doesn't mean it's not important. Really. Signing a paper, that's a small thing, but if you forget to sign the wrong paper, it can make all the world of difference, like your tax forms, for example. So the other thing about the small things is that when you do them repetitively, like push-ups, they build. You get stronger. They grow. So in trading, taking those small profits repeatedly, it grows. I mean, on many of the entries, you can see there was an opportunity to take 3 to 5 pips, and then it comes back. Maybe that's the only time you get. Maybe you get to do it again and again, and you just see price zigzagging up and down, because that's the way price moves. It doesn't move in just straight lines, it zigzags. And that's how you can catch it. Every now and then you catch that big gainer, but even if you look at that big gainer, there was ups and downs. Maybe 3, 4, 5 pip swings at times. Sometimes just enough to, trigger your stop loss if you moved it to break even +1 and only for it to take off. In fact, I read something I think it was last night or yesterday sometime, where the guy says, the thing about trading is that we are our own biggest enemy, which I agree with. But he says was watching the trade is a problem, because when you watch it, you react, your emotions kick in. So he says, you put the trade on, you put your stop loss on, you put your TP on, and you walk away. Then you come back the next day or a couple hours later and see what happened. Because he said another thing which I thought was pretty interesting. If you come back to a trade that you walked away from and you see you took a loss, well, that's just part of the game. It's not so painful. But he says if you watch it, if you sit there tick by tick watching the plus and minus, he says that can be excruciating. And I'm thinking, there might be something to that, depending on your style of trading. So that could be a small difference. Something we want to do is put on a trade and set the stop loss and perhaps set a take profit level, and then we watch. But if it's painful, why watch? He says there was a buddy of his, and in fact, it's something I do. I love, I guess they're going to be the Las Vegas Raiders, but I've been a Raiders fan since there was Raiders. And sometimes I just hate watching the game because I just want to know the outcome. Did they win? Yay, great. But I hate watching them lose. It just, it's just too painful. So maybe taking that attitude and applying it to trading might be just the same thing. It's like, okay, that trade was a loss. Oh, well, it was within my parameters. And you knew I was going to segue to this screen some way, right? So it's in my risk parameter. I'm willing to lose, a certain amount per trade, no more. So when it gets triggered, it's like, okay, well, win some, lose some, right? But to sit there and watch a trade for, half hour or hour or 2 hours or 3 hours and then wind up losing, that's just, you'd be yelling at the screen and all that nonsense. Come on. And if you're wondering why I spend so much time talking about it, things like this, it's because, psychology and trading, that's the biggest thing. Once again, it gets back to you. I can show you all these different trade entries. We can have the weekly open, the daily open. I love midpoints. You can take the breakouts of the highs and the lows. We can, but that's so simple. That we can talk about that, but it doesn't really do anything. Yeah, when price gets here, you buy. Yeah, it's that simple. So, did price actually hit there? We had a high here week of 110.01. Well, see, 110.019. Nope, didn't quite trigger it. So that wouldn't have been a loss. Now, if you rush the trade, then you'd be looking at a loss. But you see, this is simple. Just like, I want to know how many people are doing these first day gaps, first day of the week gap trades. Sundays, some places, or Mondays, other places, depending on what part of the world you live in. But I'm just curious, how many people do this? How many people are trading, the weekly open? Or we come to the day chart. How many people are trading that daily open? It's 18 pips down now, right? So how many people are trading that? How many people are trading, the buy zone breakaway? Look at this, high to close, 46 pips, close to low, 24. Either way, there was money to be made. But these are simple trades. Are you doing it? Yes? No? Let me know. Type a comment down here. Just, let me know. Are you what you're trading? Are you doing it? Because if you're not, then you got to look at you. Stare in the mirror. It's the psychology, what's going on in your head that's preventing you from taking these gains. Is every trade a winner? No, we look at it every day. Look here. Buy zone. Yeah, there's a potential winner right there. Some pips. Was it a bunch of pips? No, not really. You had a chance to make 8 pips. Okay, and if you said, okay, right here, if you put your stop after it peaked there, you say, okay, if you move your stop there, that would have been 3 pips. Yeah, no big deal. Okay, here, if you took this short, and if you put your stop here, you stopped out. 10 pip loss. If you put your stop here, right here, you would have basically scratched the trade, maybe a 1 pip loss. You scratch it, big deal. Here, you enter. Okay, it probably went down, then it went up once again. You had a chance for big gains here. What do I call a big gain? Oh, let's see, 17 pips. Who's going to sneeze at that, right? Here, once again, chance to go short. And look at this. Once again, right here, you had a chance to make 32 pips or so. Got close, but no stop. So you see that these opportunities are happening all the time, every day. You just go back and look at these people. Oh, well, you get chopped up. It's just like, no, you put the trade on, and if you're going to actively manage it, you do this. Otherwise, you put your stop on, you win some, you lose some. But let's see. Okay, let's just look here. What's going to be your TP? 10 pips? Okay, so you lost one. You lost one. Okay, you won one. Here, you won another one. So you're 2 out of 4. You would have broke even, right? But chances are you don't start trading here. Maybe you started trading here, or here. See, this is 8. This is an 8 o'clock bar my time. That's 11 o'clock New York time. So we got 11, 10, 9, 8, 7, 8. Okay, right around here is the New York Open. So there you go. What else can I say? It's right there in front of you. You just have to do it. Means small things. Rat trade. Here we go. Put in a high, then put in the low. You see we've got the separation between the zones. There you go. Rat trade. What was the potential? 13 pips. Easy peasy, right? Pivot trade. Actually, this is a trade I put on yesterday. I said, you know what? It was right here at the top center. I said, I'm just going to go short. It's going to probably hit the pivot. I took it and it did. You know, once again, easy peasy from the open to the pivot. Now, of course, if you would have tried here, you could have taken a lot of heat. Probably should have stopped out depending on your trade size. But, you know, it came back down to the open. It's like, hey, red line, and this is a 4-hour bar. Here we go. We got a 1-hour bar at the open. Yeah, take that short. Aim for the pivot. Yeah, 20 pip trade right there. Nothing to sneeze at, right? I mean, you can take any one of these methods. They're simple. Price action trading. Hey, 3-ball, red at the line, short. 3-ball, green at the line, long. I mean, every day, same thing every day. You know, the daily 5 lines. What do we have? Green at the line, long. Red at the line, short. I mean, green at the line, long. Red at the line, short. How many times do you have to see it to believe it? Really? That many? I mean, to me, it's funny only because it's true. If it wasn't true, it wouldn't be funny at all, right? Wick zone. Every day, price enters the zone, price leaves the zone, price enters the zone, price leaves the zone. Enter, leave, enter, leave. I mean, this is simple stuff. It really is. But it's some of it's so small, you just might be reluctant to pay attention to do it. But the small is what matters here. Holo setup. Look at that. Highest open. Boom. Lowest open. Right here, you had gave you another opportunity to come in here and have a potential of 22 pips. Nothing to sneeze at, right? And let's see here. We've got the, right here, we've got the ask. And the ask dropped below the highest bid at the time. And you see here, it came all the way down here. That's what, 7 minus the pip. You could have probably had 5 pips out of that trade. Not too shabby. And as you can see here, we're just looking at the buying and selling going on based on whether or not price goes above the peak or below the below the peak, above the valley. And so you can see here, we're looking at the IRBs. So right there, it went in, came back. It's like a scratch trade to me. And put in a M15 right here. So that looks like that was a nice little profit. And right here on the current bar, that's not the current bar, it's right there at 0 pips. But right here on an M15, come on M15, there you go. You can see there was a short. So, fellow traders, I mean, really, take a look at what you're doing. Figure out what one little thing, what one small thing you can do better each and every time you trade. If you just do it just a little bit better than the time before, you're gonna be on the right path. You're gonna make it. Because remember, it's not what you trade, it's how you trade it. So let's get out there and drain the banks.